Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host. I'm Sandy, your guest host from Keller Williams Legacies, here to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamoan here. This is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. Let's start with the recent move by Ontario to offer sales tax relief to first-time homebuyers of new houses. It's part of a broader federal initiative introduced earlier this year, and it mirrors some of the incentive schemes seen during the United States housing bubble in the 2000s. Sandy, what are your thoughts on this?
Well, Steve, it's a double-edged sword. On one hand, it's a great opportunity for first-time buyers to get into the market with a little less financial burden. But on the other hand, it does seem to shift the risk from investors to these new buyers. It's a strategy that banks on the idea that these first-time buyers are less likely to default than investors, effectively transferring potential losses to families who might have to deal with them over a lifetime.
Exactly, Sandy. The intention here seems to be to stimulate demand, but we have to be cautious. It's important that these buyers are aware of the long-term implications of such incentives. Moving on, let's talk about the rise in mortgage arrears in Canada. They've hit 0.24% as of August 2025, which is a 5-year high. Some experts are comparing this to the early 1990s real estate crash. What do you think, Sandy?
It's definitely concerning, Steve. The rise in arrears could be seen as a normalization after the record lows of 2023, but there's a risk of underestimating the situation. The pace of this normalization is faster than what we saw in the 1990s, and brushing it off might be a mistake. We need to keep a close eye on how this trend develops.
I agree. We should be prepared for the possibility of a more significant impact on the market. It's crucial for homeowners and potential buyers to stay informed and consider these factors when making decisions. We'll continue to monitor these developments closely. Stay tuned for more insights in our next segment.
Now, let's delve into the latest on the Greater Toronto Area's luxury real estate market. In the third quarter of 2025, we saw a noticeable cooling in this segment. Sales of homes priced at $3 million and above fell by about 15% compared to the same period in 2024, according to Wahi's analysis. That's a significant drop, Steve.
It is, Sandy. Between July and September, 321 luxury properties changed hands in the resale market, which is down from 376 during the same quarter last year. Not only that, but it's also a 17% decline from the second quarter of this year, when 388 luxury homes were sold. This suggests that even high-end buyers, who typically have more financial flexibility, are exercising caution.
Absolutely, Steve. It seems that despite these buyers having bigger budgets, they're opting to stand on the sidelines for now. Wahi economist Ryan McLaughlin mentioned that this trend is evident in the data. However, it's interesting to note that the city of Toronto remains a hub for luxury activity. Out of the 22 Greater Toronto Area neighborhoods with at least 5 luxury home sales, 14 were in Toronto proper.
That's right, Sandy. And some neighborhoods actually saw increased activity in the $3 million plus range compared to last year. These include prominent Toronto neighborhoods like Ledbury Park, Lawrence Park, Rosedale, Forest Hill, The Beach, Yorkville, and Willowdale, in addition to West Oakville and Halton. This indicates that well-established areas with central locations continue to attract affluent buyers.
Yorkville, in particular, emerged as the priciest luxury neighborhood, with a median price of $6.25 million among the 9 luxury homes sold during the quarter. Casa Loma was another standout, with a median price exceeding $5 million. Meanwhile, York Mills recorded the highest volume of luxury sales, with 18 properties sold above $3 million, matching last year's figures.
And it's worth noting that while Eastlake and Oakville had 17 luxury sales, that number was down from 19 the previous year. Old Oakville also saw a decrease from 26 sales last year to 16 this year. Interestingly, Eastlake is known for its custom luxury homes and often appears among the top underbid neighborhoods, according to Wahi's Market Pulse reports. This suggests that even in high-demand areas, buyers are negotiating harder or waiting for better deals.
The data really underscores the importance of location and the appeal of established neighborhoods. Despite the overall cooling, these areas continue to attract buyers willing to transact at the $3 million plus price point. It's a testament to the enduring value of prime real estate locations. Maple Financial has recently caught the attention of the industry by making strategic moves in the alternative lending space. The company's revival, spearheaded by John Webster, who came out of retirement to bring back the brand he sold to Scotiabank in 2006, is now leveraging CMLS's infrastructure and Nesto's digital reach. This collaboration aims to create a more consistent and predictable model in the alternative market.
That's right, Sandy. The partnership between Maple Financial and CMLS represents a significant shift towards bringing prime lender discipline to the alternative lending sector. Daniel Webster, the president of Maple Financial, emphasized that the company spent a considerable amount of time understanding the challenges brokers face in this space. He noted that inconsistent terms, hidden fees, and tedious application requirements are common issues.
Indeed, Steve. By aligning with CMLS, Maple Financial aims to address these pain points. The deal, which closed in October, allows Maple to utilize CMLS's institutional backbone and digital infrastructure. This partnership is expected to accelerate the introduction of new products and services, enhancing the non-B20 segment of the market.
Andrew Gilmore, Senior Vice President of Residential at CMLS, expressed that this collaboration is a case of 1 + 1 = 5. He mentioned that both organizations are working on exciting product enhancements that should be available by the first quarter of 2026. This strategic investment is set to make the alternative lending experience more akin to dealing with a traditional financial institution, which could be a game changer for brokers and clients alike.
It seems that Maple Financial is keen on offering a broader product suite to cater to a wide array of alternative loan customer profiles. Daniel Webster highlighted that Maple's approach focuses on the borrower's capacity and exit strategy, rather than just the property securing the loan. This is quite different from many mortgage investment corporations and private lenders that prioritize the asset over the borrower's ability to repay.
Exactly, Sandy. This approach allows Maple Financial to provide a single submission process for brokers, reducing the number of applications they need to submit for each client. CMLS's servicing expertise, combined with Nesto's tech stack, is expected to improve efficiencies for underwriters and provide a seamless experience for brokers and clients.
The collaboration between Maple Financial and CMLS is certainly an interesting development in the alternative lending market. It underscores the importance of institutional rigor and transparency, which are crucial for brokers to understand and stand behind the products they offer to their clients. It'll be fascinating to see how this partnership shapes the landscape of alternative lending in the coming months. Now, Steve, let's turn our attention to the recent developments at the Westboro Mortgage Investment Fund. They've just announced an increase in their monthly distribution, effective October 31st, 2025. This move ensures that all net income earned during the 2025 calendar year is distributed to their fund unit holders.
That's right, Sandy. The fund has increased the monthly distribution per eligible Class F unit from 7.1 cents to 7.3 cents per unit, representing a non-compounded annualized return of 8.75%. For those participating in the distribution reinvestment plan, the compounded annualized return is 9.11%. This increase applies to all other unit classes as well, reflecting a pro rata increase.
It's impressive to see such strong performance from the fund. They've recently surpassed $500 million in assets under management and earned top 3 honors across multiple performance categories at the 2025 Canadian Hedge Fund Awards. Derek Serra, the president of Westboro Mortgage Investment Fund, attributes this success to their hardworking team and the strong relationships they've built with respected mortgage brokers across Canada.
Indeed, Sandy. The fund manages a diversified portfolio of short-term residential mortgages in Ontario, with over 90% of these mortgages in first position. Their primary objective is to provide investors with consistent and stable risk-adjusted returns, which they seem to be achieving quite effectively.
Derek Sarah mentioned that their success is built on a winning platform from origination to underwriting to administration. It's clear that the trust and support of their dedicated investors have been crucial in creating a strong and enduring organization.
It's certainly a testament to their strategic approach and the importance of maintaining robust relationships within the industry. The fund's ability to manage growth and navigate potential risks is likely a key factor in their continued success.
Absolutely, Steve. The Westboro Mortgage Investment Fund's recent achievements highlight the value of a well-managed and strategically positioned mortgage investment fund in today's market.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.